Hey everybody, welcome. It's Tony Zayas here on the SaaS Founder Show. Excited to have you guys back for another episode. We always have great conversations here with SaaS founders, sharing the ups and downs, the challenges, the hurdles, and the excitement of being a SaaS founder. So with that, today we're talking to SparkPlug co-founders Andrew Duffy and Jake Levin. SparkPlug rewards top performing retail salespeople with cold hard cash via gamified commissions, contests, and goals. And here to tell us all about it and the journey are Jake and Andrew. So, hey guys, thanks so much for joining us here today. How you guys doing?
Hey there, how's it going?
Very good.
Good morning, Tony.
Good morning. So awesome. So I guess I read the little descriptor, but Andrew, Jake, tell us just a bit about SparkPlug, what it's all about, and I would love to hear from your perspective as the co-founders.
Yeah, absolutely. I can take a stab at it. So I think the overarching mission of SparkPlug is to help every employee earn like an owner. There's a big division in our economic world between people who own assets, the holders of capital, and the people who earn wages by working, in particular on an hourly basis. And as we've seen recently, there's been a breakage in that relationship. Hourly workers have been resistant to coming back to work, and owners of businesses like retailers, restaurants, warehouses have been unable to convince workers to come back to work after the pandemic. And as a result, it's causing a ton of economic problems. So SparkPlug is, a solution to those types of issues, which allows retail employees, restaurant employees to earn more money when they perform more, when their businesses do better. So in that sense, they earn, instead of just an hourly wage, a percentage of what they sell or a percentage of what their business sells. And ultimately, we create all of the software systems to track that information, distribute funds, engage employees, and get everyone excited about the potential for that to not only improve how businesses operate, but also just improve employees' lives in general.
It's pretty interesting. As we've talked to a number of founders, over the last year and a half or so, that the pandemic actually was a big boost to their business based on what they were doing, their model. How was it for you guys? Because it sounds like this is something incentivizing, motivating employees. It sounds like a good thing for kind of that challenge that employers are facing today. So just tell me a bit about how the pandemic has impacted the business.
I wouldn't say it felt like a boost at the outset. In late 2019, early 2020, we were just chugging along as a brick and mortar retail sales software, and we're in the process of trying to raise our seed round. But as soon as March of 2020 hit, pretty much every investor we were talking to stopped responding to our emails and told us that, if they did respond, brick and mortar tools were not something they were going to invest in because, they thought we were all going to be living in the metaverse. So they ultimately weren't particularly excited about the business, but that, luckily didn't stop us. And, we kept chugging along during the pandemic and were able to work with, retailers that did stay open during that time, or at least reopened relatively quickly. And that ultimately is where I'd say we found the product market fit of the tool. And that disruption was ultimately really powerful for our business because it showed not only employees their value, but also employers the value of their employees, and the challenges that they would face in getting those employees back to work was something that changed the paradigm of how those hourly workers were ultimately treated. So I think it was really important for our business, and we're glad that we started before the pandemic and had that sort of base of software and strategy and grit that we could use to get through the pandemic. But it was definitely a tough time, that's for sure.
Yeah, it's interesting. I think that it's venture capitalists, especially early stage investors' job to kind of have a thesis of what the world will look like in 5 or 10 years, and to kind of identify early stage companies that that share that vision and are going to push that forward. However, we kind of found at the time and kind of consistently that investors are just sensitive to the news cycle of the day. And of course, it's really hard not to be when you're being inundated with news from every angle about how retail is dead and no one's ever going to set foot into a shop ever again because of the pandemic. Obviously, that has not been the case. But yeah, that kind of the challenge that we faced in early 2020 was definitely something we had to overcome. And while we had to adapt our narrative and our kind of timeline and how we were thinking about SparkPlug, sticking to that original vision and kind of having faith and understanding that maybe not this too shall pass, but the world is certainly changing, but we're kind of going to regress to the mean at some point.
Yeah, that's fantastic. Speaking of that vision, I would love to hear the origin story. Where did the concept come from? How did did you guys know each other prior? Where did it all begin?
Yeah, we were undergraduate classmates, actually. We met at Harvard, where we were both studying different types of behavioral science. I was more behavioral economics, Jake more government, public policy, social psychology. And we became very fast, very close friends over that time, and had always ideated as undergrads about wanting to start a business, wanting to build something from the ground up and solve really hard problems. But we didn't have that sort of spark of inspiration until we both started out in the finance world. So our first roles after school were in, respectively, a hedge fund for myself and a private equity research shop for Jake. And in both of those roles, we really learned what the problem was that we had been circling around, discussing, and thinking about that we thought we had a great solution to. So on my side,
we also learned we were bad employees.
Yes, exactly. Unemployable. We both hated working for other people and found that environment to be just so difficult to get up and go to every single day. So that has also shaped our view of how we want to treat our employees and make people excited to work at SparkPlug. But it, subsequently taught us that on my side with, the hedge fund world, the economics of labor that I was getting deeper into were totally broken, that capital and labor were totally imbalanced. And on Jake's side, he was learning all about tons of different consumer products and how they actually get out into the market and into people's hands. And we realized, not instantly, but in its sort of first inkling that, hey, there's some dislocation here between the physical store environment and the brands that are trying to sell through that store environment, that we can probably fix the problem of if we apply smart technology solutions to it. And then we said, look, this is enough for us. We're just going to quit and move out to Colorado and trying to figure out there in a world where the cost of living was a little bit lower than the East Coast cities that we were living in.
What was that timeline like? When did you make that decision that you were able to validate the idea enough that it's like, let's do this. Let's take that leap? Because that's scary.
Scary,
Definitely.
But we didn't really validate it at all, to be honest. Okay. We just said, look, we think this is an okay idea, and ultimately we're just going to figure it out. So, and I think we always also didn't have any responsibilities.
Sorry to interrupt.
No, go.
I think that we were kind of that was unique in that it allowed us to be really obsessed with the problem that we were kind of solving, getting into the space and being really interested in the relationships between retailers and brands and the workforce dynamics and the role of that frontline employee. And we didn't really have such a crystallized product or vision. And I think so many early stage founders get so fixated on their solution and what they see to be the answer to the problem, and they'll build that and fail to do that upfront diligence and bring a product to market. And if it's not resonating, convince themselves that it's something wrong with the market, not their product, and there's more education that needs to be done to customers, and this product is right, and we just need to convince customers how right it is. And that was not the approach that we had, because we just didn't have that product or that solution in mind at the outset. We understood the problem. We wanted to understand the problem space so much better, and that allowed us to really quickly iterate on different sorts of solutions and ideas, and test different things and be super responsive to what we were hearing, and not just get our kind of ego almost so tied up in the product or solution that we were trying to bring to market, and instead just be super obsessed with the challenge and really, I think, empathetic with our customers and the people that we were talking to every day about, how they were thinking about their employees, their customers, their relationships, and what opportunities there were to use technology to solve those problems.
It's a great perspective, and I love hearing that. So it sounds like you guys identified really the problem first, and then went about how do we solve this. So how did you really get ingrained in understanding kind of what that dynamic looks like in the retail space, and so that you can figure out the solution? Like, what were those steps? What did that look like? How did you gather that info and feedback?
Yeah, kind of two pathways. So one was that we actually started our own consumer brand. As we were getting out into the hustle and bustle of being entrepreneurs, particularly in Boulder, Colorado, where we were building the company. We were adjacent to the natural foods industry, which is really, really a strong industry in Colorado and in Boulder in particular. And that afforded us the opportunity to build up a organic tea brand, which we started and which actually ended up being a really great learning experience for us to identify, hey, as a small brand owner, what are the challenges of selling a product in retail, particularly a product that is expensive and requires explanation for people to actually understand why they should buy it. So, we were selling this in spas, in hotels, in organic grocery stores, and it was just such a nightmare getting it off the shelf because we had to educate all the point of sale employees, and we had to beg these stores to tell us how much they had sold, and we had to consistently follow up with them to figure out when we should be trying to incentivize more sales or get people to sell more products with education.
And we were getting invoices from them. That was like the most frustrating part. We'd get an order for $10,000 of tea, and we'd be so excited, and we'd drop off the product, and of course they have net 90 terms or something because we were so small, so we were just at their whim completely. And 30 days into the net 90, after dropping off the product and having no cash in hand for it, we get an invoice from one of these small grocery chains for $1,200 in scanbacks because we offered like a $5 promotion, and they did not give us any data on which stores, because they had 8 locations, right? And we wanted to know which stores were doing well because they also were asking us to come in every Saturday and do samples and do trainings for their employees. So that was just so acutely painful for us to kind of know that something was resonating with the market and that something was working, but and some of our marketing activities, whether it was the customer facing, $5 back, or really the pop-ups in store, or an hour-long session with with a team of employees about how our product is so much better than everything else on the shelf. We knew that some of those things were working, but we didn't know what, and there was just like no communication from the store. It was really opaque. So that really kind of crystallized what ultimately became SparkPlug for us.
Yeah. And then as the sort of secondary follow-up to that, it was really just talking to every single operator that we possibly could, to the point of being really, really annoying, I think. Just constantly trying to talk to retailers and figure out how they think about their employees, how do they compensate their employees, talking to their employees and figuring out like, hey, do you guys get a commission? Do you guys get any type of reward? How do they distribute those rewards? Hey, can we go into the back and see, what do you guys have up on your whiteboard? Just trying to figure out literally everything we could and being as like invasive and annoying as possible. And then similarly making a few key relationships with brands who we could, just through aggressive networking, find the executives of and identify for them, hey, we've identified these things in retailers. Do you guys experience these problems on your side? Do you try to get in front of these employees? What does it feel like for you all? What are the big things that you want to see? And those really crystallized and I think solidified our early intuitions. And like Jake mentioned, I think really helped us to stay on the track of caring about a problem and trying to find the best solution to it, rather than having a solution and trying to find problems that it'll solve. Because that second direction just doesn't really work, and it's ultimately going to restrict your flexibility. Whereas if you're always starting with like, what's the relationship I can build with a retailer or a brand who's going to guide me towards the solution that's working for them, and combine that with my intuition, then that was how we really got to where we did with the product. And we're still doing that. We're constantly still adding to what the product's feature set is, obviously, but also in many ways trying to define the product direction with that combination of intuition and feedback, which is sometimes hard to strike the balance of.
Yeah, and I think in that endeavor, it was so important. I think our academic backgrounds really served us well because it allowed us to be smarter than our last meeting, which is a piece of advice that one of our early investors told us. And that really just means that you have to take every conversation with a grain of salt. Otherwise, it's just going to be like whiplash. You're going to hear one thing from one person and you're going to have another conversation. They're going to say the complete opposite and you're never really going to get anywhere. So in those kind of like early conversations and that upfront product discovery and diligence, it's so important to be super organized in the data that you're collecting and bucketing the feedback that you're getting into, what are the common threads between this customer that said this and another customer that said something similar versus another potential customer that had the complete opposite opinion and was looking for something completely different. Because if you're not kind of grouping those appropriately and understanding what types of people are and what type of businesses are looking for what types of solutions, then you're just going to be kind of like ping-ponging back and forth between different ideas and different feedback.
So just a quick question on the tea brand. Did you guys have the idea, was SparkPlug in mind like that entire time when you launched that?
So yes and no.
We like to think it was. I think, looking back, you connect the dots like that. But at the time, I don't think that necessarily was the ultimate goal. I think we kind of definitely thought of it as a discovery business. And I think that while
like a starter home, but
a starter home,
startups.
Yeah. Well, Andrew and I were also always, interested in technology and software. Neither of us are engineers by training or, product designers even by training. So, when we first kind of thought about starting a business, software platform was not something that was immediately accessible for us. It was something that would require additional talent and resources in order to get off the ground. Whereas something like a tea company, between the two of us, we could kind of like piece together what we needed. And ultimately that wound up being the proving ground for what SparkPlug became.
Yeah.
Very cool.
And I think a lot of that experience was also like very practical. In retrospect, every founder story is such an epic narrative of this led me to this, led me to this, led me to this, and this was all part of my master plan. And in reality, moving in the forward direction, it's often, okay, well, I got to Colorado. We didn't have any way to earn money. We had to start something. Neither of us could code. So we thought, let's start a tea business. That got us a little bit of the way. And then we figured out during this that there was this problem. And then that helped us to understand this. But we still kind of ran them in parallel, weren't really sure which one was going to be the one. And then figured out the technology one was really the best one. And then, charged ahead with that. So I think that as much as I think SaaS founders in particular want to create like an exciting narrative around the businesses in retrospect, it can be distracting from the reality, which is that like it all is very stochastic and sometimes very random as to what opportunities you find, because there are several occasions for both businesses over the course of which, if we had not just happened to be in the right room with the right person at the right time, not even in a professional context, just like some friend who we happened to be at dinner with introduced us to someone who worked at this company, and that then led to a big partnership that was huge for us. If none of that had ever happened, then we never would have gotten to the next stage. So I think that is, you have to take everything with a grain of salt. You just got to show up, and you gotta ultimately be fortunate, but you got to put yourself in a position to be fortunate.
Yeah, like when we first moved to Colorado, we had nothing better to do than to show up to every single startup and random industry meetup we could find. That was back when meetup was still kind of a big thing, and there were always different coffee shops hosting different cool meetups. And we were just every single night for months on end would just kind of show up and talk to people. And that's where we first met our herbalist, who was kind of ideating around different blends of a tea company she wanted to start, and that's what led us to start Sky and Wyatt, the tea company. So yeah, I'm a big believer that 90% of success is just showing up and saying yes.
That's fantastic. Tell me a little bit about what the MVP looked like, and being non-technical founders, how did you guys start to build out SparkPlug?
Yeah, that's such a good question, and something I think the MVP is such a challenge for so many early stage founders, especially those who are not really in a position to execute against the code base on their own. Version 1 of SparkPlug was actually a tool that we licensed from a European startup company as well. They were kind of obviously much more mature than we were, but they had a kind of a white labeled solution that was a in its standard use case, kind of an employee engagement, employee communications platform. And they offered a white label version of the tool that was designed for big enterprises like McDonald's or something to have a McDonald's employee communication app. And they white labeled it, and you could download it to iOS, Android, and it was the McDonald's app. And we worked with them, and we kind of branded it as our own tool. They worked with us closely, and they kind of understand that we're a startup, and that allowed us to, over the course of 6 weeks, launch on iOS, Android, and with like a web application, a very full-featured employee communication tool that we were kind of able to adapt some of the feature sets to serve our use case and kind of silo our customers into different buckets within it. That required no coding on our end. That kind of just worked with their team to figure it out. And Andrew and I talk about this all the time because, after about a year, we had that product in the market for about a year before it just didn't work for us anymore. It was just too much of a handcuff for us because we couldn't change anything about it. It wasn't our product. We were, in 6 weeks, we kind of launched this tool, and we were out in the market getting people to use it. And people were so impressed with it because it was really mature and cool, and it worked. And then we started getting feedback about how great it would be to be able to do this one thing. It just really inhibited us from being responsive to our customers and evolving the product and like pivoting the use case and serving the needs of the kind of more specific niche of the customers that we were really trying to serve. So it was incredible in the sense that it allowed us to really quickly validate that there was something to what we were trying to do in this space. But ultimately really was a challenge for us. And it was really a painful Band-Aid to rip off on that day that we decided that we could no longer use this tool anymore because we had just kind of pushed it to the limit of how flexible it could be and how it would work for our customers. And it was time to, at that point, we kind of had the resources both from early stage investors and then from the customers that we kind of got onto that platform to rip the Band-Aid and break ground on our own, 100% homegrown solution of SparkPlug.
And I think that experience is another example of sort of the like retroactive story versus the practical, forward-looking piece. And we go back and forth over whether it was the right decision to use that, because at the time we were really, really focused on speed. We wanted to really, really rapidly get something out there and not have to go through that classic like MVP iteration process, since particularly we didn't have those engineering capabilities, and instead go straight to an SRP, a sales ready product, and just be able to get into those conversations. And given where we are now, I think that was definitely the right decision, because if we had started by trying to build something from the ground up or work with an agency to build out an MVP, which were all things that we were considering, that would never have gotten us to the point of insight that actually drove us towards what SparkPlug is today. And that was because when we got this tool out there, it had plenty of different features, all of which we could practice selling towards and see what people actually cared about and what they were interested in. And then when we were able to land some pretty big clients with that original iteration of the tool, then we were able to be essentially a part of their organization and work really closely with them to figure out what the problems were in their retail environment and identify literally in the store, like have an excuse to walk into the store and say, hey, I'm here to onboard everyone to the tool, walk around, look at their whiteboards and see, hey, that's interesting. On this whiteboard in the back at all of these 5 stores that I've driven to today, they have a leaderboard of all of the employees. Well, what if we just build out a leaderboard that's already integrated into their point of sale system in this tool, display it to them, and then they can just see what it looks like. And that's actually where we started what I would call like the MVP process, because within our existing SRP frame, Jake and our CTO at the time drove in this integration snapshot where it just showed them, okay, here's this leaderboard of all of the different employees and how they're selling. And then that started to get a lot of traffic and a lot of interest from people and started to boost sales in and of itself. And that really gave us the first flicker of insight into how powerful that piece, which we had always believed in, but had never had the opportunity to test, was going to be. And that's what drove us towards building out SparkPlug, which is, in essence, the most powerful, well built out engine for creating leaderboards, competitions, commissions, goals, anything that's going to reward people based on their performance.
So was that leaderboard, was that like kind of that initial like sticky feature that got some traction and got people interested?
I think that was the most unique thing. I think that the tool that I was kind of describing before was like an employee intranet, internal communications for updates and reminders and scheduling, and it did a bunch of stuff, but it was not really differentiated in any way. As we were kind of trying to sell that product into stores, we just get met with, well, we're going to use Slack, or we just text each other, or we just email each other. And it really wasn't that kind of like compelling use case. And, having those conversations and seeing those whiteboards really was what kind of presented that unlock to Andrew and myself, that there was nothing besides the whiteboard in the back where managers were posting a leaderboard of the highest order average. And, we were lucky enough to get some stores to consolidate that update from the whiteboard onto the tool where they could post their team, via like a timeline message in that MVP app, the order average update. But that still required the manager to run the export, pull the numbers and post that to the team. And that was that kind of insight of the next evolution of really specialized use case of saving that manager a half hour every day of running that pivot table in Excel based on the point of sale export, and instead integrate with the point of sale and calculate that leaderboard and post it in real time. So yeah, absolutely. And I think that the kind of landscape today of no code and low code tools is so remarkable, and can really allow you to do so much and to like get that attention and kind of like wedge yourself into customers or users so easily, where you can then start to get the real learnings and the real insights on how your product can be more different or better before ever writing a line of code that's different from anything else.
Yeah, it's really cool. So how did you guys go about getting those first few customers?
Literally every which way we possibly could. We tried absolutely everything, and simultaneously nothing worked and everything worked. Like, we got some customers by just walking in the door of the store and bothering them until they would get the manager to talk to us. We got our biggest customer that, was that one that we sort of gleaned the insight of the leaderboards from by going to a networking event that the CEO was speaking on a panel for. And I sat in the front row and just like made eye contact with him the whole time and was asking a bunch of questions. And then immediately after it ended, just beeline walked right up to him and was like, hey, we got to talk, bang, 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 just pitched him super hard on it. And that turned into, having a meeting with their head of IT and then having a pitch to their top 20, division heads, and then finally getting them to onboard the tool.
Or say no.
Exactly.
That was kind of the philosophy that we always took. Like, we either get a yes or a no, and nothing else is acceptable. And we were going to email and call and follow up with people until they were like, no, leave us alone, in which case we drop it and forget it. Or they say,
or we'd say, well, come on.
Yeah, exactly. Or they would say yes. And I think that kind of selling to no philosophy is just like so important, because people are going to let you sit in their inbox, and you really do have to be aggressive in getting that attention, and then ultimately if your product kind of speaks for itself, then you're going to get that yes that you're looking for. And I think alternatively, we also when you think about sales and leads, you can take a quantity approach or a quality approach. A volume game of emailing 10,000 people, knowing that you're going to probably get a 5% conversion, and kind of finally get 5% to say yes. And you're just going to like pull from whatever online resource or list you can find to get those emails, versus quality. And I think that's for SparkPlug. We have, while we started with quantity of just like getting into as many inboxes as we can, the kind of marketplace aspect of our product, where we allow the CPG companies to offer incentives to store employees, kind of lent itself to identifying the really high quality leads and the good fit customers so that we could get introductions and kind of approach a customer knowing that SparkPlug is such a great fit for their business, because so many businesses that look just like them and sell products just like theirs are already using SparkPlug, and we can approach them with the case studies and the proof on why they are such a quality fit for our tool. So I think that early stage quantity is your friend, and then as you kind of find that product market fit and can kind of like distill the perfect customer, then you kind of shift to a quality approach.
Yeah. And that shift can be hard to track when you're doing that. And it can be hard to determine when your business is at the phase where you can afford to turn down a bad fit customer or fire a bad fit customer. I feel like we're only just getting to the phase where we can identify, hey, this just isn't that good of a customer. They're not paying us as much as we want, and they are an outsized amount of our customer success, and they just
pain in the ass.
Yeah, they're a pain in the ass. They just make us stressed out because we have such a extreme dedication to customer success and customer service and making sure that people are really, really succeeding on the tool, that when people aren't succeeding on the tool, it's extremely stressful to us. Like, we just feel like we really want to get them to succeed, and sometimes they're just not the right fit to succeed on a tool. So identifying who those people are at the outset is really hard to do, and is critical though. And I think even as it pertains to what Jake was saying about quantity, early days, I agree with that. But I do think that there's a degree to which you can't replace the relationship building aspect. Like, those early customers are going to be the ones who you have to be able to go back and forth with and say, hey, sorry, this thing's actually broken. And, oh, actually, this thing's not going to be ready until this time. And hey, can you actually help me? Can you like download this thing and tell me if it looks right? Or can you send me a screenshot of this thing and tell me if it looks right on your screen? Like, you're going to have to do all of that stuff with your early customers. So you can't just like email out 10,000 people and tell them you have something that you don't have. You have to get them interested and then be very clear with them about the fact that this is a tool that we're going to have to like iterate on together. Let's build a relationship around this. So the relationship building aspect of it, once you've gotten them from that maybe first set of conversions, is a really crucial part. And in that sense, you kind of turn the quantity relationships into quality relationships by really being vulnerable and honest with them about like, hey, we're starting this out. I need your help. We know this would be so helpful to you. And if you're really bought in on how helpful this could be, like, help us build it together.
Yeah, that's really interesting. The approach to, quality versus quantity, and kind of, making the transition from one to the other. I do consulting with SaaS founders, and that is, I think quantity, it's more accessible. It sounds easier. It sounds, faster, less expensive. How do you make the case? And how did you guys come to, was it by design and intentional that you said, hey, we just need to take activity, and get out there. But was it intentional that you would shift and become more targeted and put the emphasis?
Yes, I think it was. I think that in the quantity side of things, it's really hard to discern the strength of their intent. I think that you can, again, email 10,000 people and 100 might respond with like, yeah, that sounds cool. But of that 100, you probably are only going to get maybe 5 to click the buy button. And finding out how many people of that 10,000 are going to click buy, I think, is like the real challenge. I actually have a friend who is in the middle of starting a business right now, and she it's like a hair product that's like super unique for like a hair mask, and she doesn't have it at all yet, and she's really trying to like test how receptive the market would be to this sort of product. And everyone she asks says yes, and people are really inclined to say yes to things, especially when they are talking to a founder and they want to be encouraging, and they're like, I could use this. But how many of those people are really ready to click buy is a whole different story. So what she did was design a website where people could click buy and could put in their credit card details. And as soon as they did that, she doesn't have the product. So she was just immediately refunding them and following up and saying, so sorry, we're out of stock. We'll follow up when we're back in stock. But that to me is, of kind of like dubious ethical standing, perhaps, but is a like unbelievably effective way to really flesh out the purchase intent of the audience that she's trying to target. So I've always thought that was a really impressive approach, and is something that is just a really challenging thing to do when you are in that volume game. Andrew, what do you think?
Yeah, I mean, I think Jake has a more scientific approach to it than I do, and is better read on the overarching like strategy of converting huge funnels of leads into individual buyers. But I just, from a qualitative, like empathetic standpoint, I've never clicked on an ad to buy something online. I've almost never, maybe once, responded to a cold email to buy software ever in my life as a business owner or as an individual consumer. And I have just never felt strongly that is a sales strategy of like crazy high quantity, crazy low quality touch points that would serve a business well or would serve a business efficiently. And I think that intuition plus the reality of when we did do that, there just weren't that many people who would move all the way through and get to that click buy point. I think pushed us towards the direction of like, look, we want to build a tool that sells itself, not in like the classic salesy way, but literally in that using the tool creates a network that brings other people in to the network inherently, that classic product-led growth strategy, which for us means CPG brands want to bring their retailers onto the tool and leverage the relationships they already have, which are strong, which are meaningful, which are tested, instead of relationships that we're just trying to build out of nowhere with a cold email. And vice versa, when the retailers want to bring their brand partners on board so that they can receive more incentives for their employees, we can leverage those relationships. And that always struck us as the thing to invest in and the way to actually do quality at quantity, because we can leverage the relationships of our network rather than trying to create our own relationships at scale. So I think we simultaneously had some intuition around it, and then we had some experiences around it that drove us to where we are today. And I think as it pertains also to that sort of like click buy behavior, while it may be discouraging, it actually is intelligent to bring the harder part of the sales process forward in the sales process. Because if you have people opening an email, scheduling a meeting, maybe taking a look at this or that thing, those are all points where you will build up your hope about what will get them to then buy, and then they actually don't. So if you try and get them to execute on some effort early on and indicate that, hey, they do have some buy-in about this thing, they actually want to try to get it, and you don't actually make it so easy for them and so attractive for them to click into the next step, that can actually help save you a lot of time and a lot of heartache by just saying like, look, I only want to get people who actually care about this thing and are going to move through the process for it.
Same goes with pricing. I think otherwise it's like a disservice to always be, you can use this for free as long as you want. It just means that you're going to spend a lot of time with them. You're going to customize your product to fit their needs. And then when you ask them to pay $20 a month, they're going to stop responding to your emails. So getting that buy-in up front is the hardest part, exactly kind of what we're talking about here, and what it sounds like, I think is so relevant to so much of your audience, right? Of those first 10 customers. Because once you have 10 paying customers, building the lookalike audience and leveraging them for referrals even it is so much easier and so much more accessible. But getting that first 10 is the most challenging part. Absolutely.
And there's also such a massive internal emotional difference between selling a product that you are totally unsure of versus a product that you're confident in. The process of going out and trying to sell someone on something that literally no one has ever used is like dancing on a high wire. It feels so stressful and so full of pitfalls. And that really activates imposter syndrome and makes you feel like, what am I doing? I'm such a joker. Why am I doing this at all? And then once you have those early customers that have actually used it and have actually seen positive results, it's a total game changer. And you'll always struggle with the question of, how effectively can I sell something that I don't have confidence in? So you need to build confidence in it. And the more and more customers you have who have great results in it, the more you'll be able to go out there and say, honestly and in a way that actually builds conviction for your customers, because they can detect it, whether it's subconscious or conscious, that you really believe in this thing. That'll just extend your lifetime as a founder trying to hustle your first 100 customers now after your first 10 customers. So thinking about it in that iterative emotional way is also super important.
I love hearing about and talking about that emotional side of things, and kind of as you go through this journey as a founder, the challenges and things that you're taking on, and like the point of imposter syndrome that comes up a lot. How did you guys deal with that? What's the point I wanted to get into was the dynamic and how you guys work together, but how do you guys, what did that journey look like early stage when it's rocky and tough, to gaining some momentum? How did you deal with, that roller coaster that you're going through?
Good question. I think Andrew and my strengths have always been something that I think would be hard maybe for other kind of early stage founders to replicate, in that we are best friends and get along pretty well, and that we have always been 50-50 on everything. It has never been a question whether either of us have been bought in, or one of us is working harder than the other, and that has been because we have always been 50-50 on our ventures. And I think that there are plenty of businesses and startups that have succeeded with different sort of organization or ownership dynamics, where there's a CEO with the idea who brings on another founder, who's like 70-30. I think personally that those sorts of arrangements are a step towards failure at the outset, and a step towards disagreements and frustration and just doubt in one another's buy-in or impact or commitment to the product or the success of the business. So I think that wherever possible, finding, of course, a co-founder. I can't imagine doing it alone. I think that would be totally impossible. So I think having a co-founder is important, or multiple co-founders. And if you can't achieve that kind of perfect split of kind of mutual trust and buy-in, then being super transparent about ownership, compensation, responsibilities is the only way that you can expect to succeed, because otherwise then you're just kind of setting yourself up for failure, I think.
Yeah, I think to reiterate that point, we had a lot of people give us the advice of, you guys should split 51-49 and decide who is like the decision maker. And I think that the ideas are free. They are cheap. Everyone has a great idea. Every great idea has probably been thought of already. And whenever people say to us, oh, wow, SparkPlug's such a great idea, it's like, no, it's an idea, just like any idea. Execution is the only thing that matters. If you're not in there grinding and making it happen, then it's never going to happen. And so if you can't come to your co-founder with whom you have a 50-50 split and an even decision-making architecture and say, look, we got to figure this out. Let's be totally transparent and honest about why we want to decide this or why we want to decide that. And if you can't come to an agreement, then that's a bigger issue than just that individual decision. And you have to hash that out first. So I think that having a relationship with your co-founder that is in many ways more like a marriage than it is like a professional partnership is super important. Like early in when we were working together and we were facing some of the harder times of the business, we went to a co-founder counselor who was just an after-hours marriage counselor. She was a marriage counselor during the day and did co-founder counseling at night. And that was really, really valuable because it gave us really good tools for managing our personal and professional relationship and thinking about different frameworks for how we could express ourselves and communicate effectively. So I think investing really heavily in the working relationship you have with your co-founder is probably the most valuable non-cash or cash investment you can make, because that ultimately is going to drive the quality of life that you have. Like if you enjoy actually working every day and doing, the extra hours on the weekend or the really difficult, sessions late at night when you're trying to figure things out together, then it again extends the lifetime of what you can do as a co-founding team. And then from like a more practical perspective, I think it's a question also of everybody doing everything until that no longer makes sense. So, there was a time early on in the business where Jake and I would just super fluidly swap roles and just, he would start doing investor communications and I would start doing, designs for a website. And then over time, we just identified that we had different skill sets that could be siloed into particular parts of the business, even though we had kind of generally overlapping skill sets at the outset, which we at first thought was a big problem. But it later on ultimately became a way for us to be able to actually silo and get better and better. And now Jake, is the operations and product guy who is a genius at designing great systems and designing great tools. And I, more am working on the sales side and the investor and governance side, and, building relationships externally and trying to leverage those on behalf of the business. But Jake is, just as naturally skilled at building relationships as I am. So he can contribute whenever I'm having a challenge or whenever we're making a decision together. And I won't say I'm as naturally skilled at product as Jake is, but I can understand those things and I can think through those things and help him, to identify, maybe what the right path is based on his intuition. So I think being able to contribute in the ways that other people are working is super helpful as well for co-founders. So don't at the outset just say, hey, you just do this stuff, I just do this stuff, because then you don't really have a decision-making partner and you don't have someone who you can bounce ideas off of. And you suddenly become just two totally separate siloed people who don't have the ability to lean on each other as thought partners.
So I would love to hear a little bit about how you guys do, strategic planning and staying, keeping the vision as something that's mutual between the two of you. Because it sounds like you guys have a great working relationship. And I love how you mentioned that, relationship counselor. We had a founder on about a month ago who literally said it was his, he had a marriage counselor he was working with that he would go to and start to talk about business. And him and his wife had to go and find another marriage counselor. That became his, his business coach or counselor, right? So makes a ton of sense. But how do you guys manage kind of the strategic planning, big picture vision, all that kind of stuff?
I honestly don't. I mean, maybe Jake has a better answer for this, but it is sort of just like a mind meld thing, which that's more the thing that we have to actively manage because we are constantly talking about and thinking about the business and constantly iterating in our own heads and bouncing back and forth our ideas such that we are very naturally on the same page and are consistently thinking the same things because we are having a lot of discourse about it. So in terms of the vision and in terms of the strategic direction of the company, those things, we're never particularly far apart on them. But I think the real challenge for us, if you have a really tight working relationship with your co-founder, is helping other people be a part of that and letting other people in on that process so that now that we've built a team and we have, 15 full-time employees, I can imagine it's hard for them. And sometimes they've expressed that it's hard for them when Jake and I will be hashing things out over the weekend. We'll come back on Monday and it seems like we kind of have a totally different strategy around how we're doing this thing or how we're doing that thing. And obviously now that the business is more mature, it doesn't 180 degrees shift over to something completely different, but there can be these kind of minor iterations that feel like, hey, I thought our sales strategy was going to be like this quarter. And you guys seem like you're directed more towards this. And I think that's where trying to scale that communication and scale that sort of vision setting with the team is a really critical part of growing a team and managing a team effectively and making sure that the magic of the co-founder relationship and the vision setting there isn't lost when you are becoming a bigger organization. So we've tried to adapt that with we did our first big team offsite because we're a fully remote team, but we did a big offsite all together earlier this year. And we had that very collaborative, collective sort of group vision and mission setting that was, an update on our existing vision and mission that had been set just by me and Jake. And it was great to be able to loop everybody in on that and really, think as a team on it and sort of set that framework for us to continue doing that in the future. So yeah, that's more where we've experienced challenges, less us two staying on the same page.
Yeah, I think it's all about organizational and institutional memory and documentation. I am a big believer in that, and that's something we're always trying to improve on. I read years ago a kind of summary of how WordPress.org operates. They've been a fully remote team since WordPress was first founded, and they have a company wiki essentially, which is split up into a bunch of different pages and subpages across every kind of business vertical and topic. And it is a living document that is filled with hundreds and hundreds of posts of discourse and contributions to the conversation, and is essentially like a living WordPress of how decisions were made, and kind of directions were decided on. And that is aspirational for sure for us. I think that that everything is still mostly on meetings and kind of captured in different ways, but I think having that sort of like company wiki where new hires can go back as far back as they want to understand how we got to this place is really valuable from like a culture and buy-in and transparency standpoint, which we are big believers in, but also in that kind of initiative of engaging everyone in these sorts of processes and kind of strategic decision making things. So yeah, I think like capturing everything written down somewhere is so important, and something that will really kind of pay dividends in the long term, if only for the kind of emotional and business time capsule that it can provide.
Yeah, I think that's a very smart move there. That defining process for scalability is so important. So yeah, that's a great early observation that you guys are following. So that's fantastic. Before I ask my last question, this has been a great conversation. Would just love to hear a little bit about, what does the next year to 3 years look like for you guys in the business? Where are you heading?
Yeah, so we have experienced, honestly, over the last 2 quarters, the most significant period of growth in the history of the company, and are dancing around that feeling of quote unquote hyper growth that we hear a lot of people use, which I think is simultaneously overwhelming but extremely exciting. So I think how we think about the next 3 years of the business is, first of all, we're raising our Series A right now, and we're leveraging that to expand not only the team, but also the quality of our systems and the quality of our product as efficiently and as effectively as possible. But we have a slightly different mindset, I'd say, around growing a business than the sort of classic like venture-backed ecosystem plays that we've seen in the past. Like, a lot of these businesses are built with monopoly in mind, and the idea that by becoming a monopoly, your business model will suddenly validate it, because then you can just jack up prices as much as you want. Whereas we're very focused on having a profitable business model that we can scale profitably and efficiently. And I think that's kind of the new wave of how startups are going to have to work, particularly B2B SaaS startups, because the days when people will just give you tens of millions of dollars to totally unprofitably and recklessly grow something and then hope that it becomes profitable, after it IPOs, I guess, those just aren't really there anymore. So in that sense, really, we're looking to grow as aggressively as possible across as many retail verticals as we can, while still maintaining that degree of efficiency and profitability, and expanding across as many geographies as we can as well. Right now we're US based, and we're pretty focused in the US, but we have a lot of opportunities outside of the US as well. The way we see it is that the more we can seed more retail verticals with our first opportunities, the more we can start spinning our flywheel of network effects that allows us to grow passively and really efficiently, rather than having to have a huge team of SDRs and BDRs smiling and dialing people. The more we can get our product into the hands of some really important flagship customers who we very efficiently target, the more we can then grow at a rate that is unprecedented for a tool of our efficiency. So that's our big focus.
It's fantastic. And where, for those, for the people who are tuned in, interested in the story and following you guys, where's the best place to follow the business as well as you guys personally?
Yeah, we're on LinkedIn. It's actually something Andrew and I are always trying to be better about, documenting the journey, and kind of sharing the wins and the L's with the world. So LinkedIn, our SparkPlug page is probably the best place for that. You can find us both there as well. We're not on Twitter or anything like that, really. We have a journal that we keep on our website, sparkplug.app, which I would love for you to check out. Lots of kind of great thoughts there on workforce dynamics and the product, and kind of the post-COVID labor crisis and opportunities before us. Anywhere else, Andrew?
That's about it. I've been told we need personal websites, so we'll spin those up soon enough.
We'll put it on the to-do list.
Yeah.
There you go. Sure, there's nothing else on that list. Well, very cool. So the last question that we always like to wrap up with, if you can both go back in time and sit down and have a cup of coffee with your former self before you dove into the business, what's the one piece of advice that you'd give to yourself? Volunteers to go first?
I'm trying to think.
I think I can go first. I think that a piece of advice that I was recently given by a mentor was to enjoy the process of earning the seat. And what that means ultimately is everybody, particularly people who are starting out on an entrepreneurial journey, want to be in Jeff Bezos' seat or want to be in Elon Musk's seat. And they want to have that impact. They want to have that visibility. They want to have that financial outcome. But it takes a long time and it takes a lot of experiences to actually earn that seat. And if a lot of people, if they were thrust into Jeff Bezos' shoes today or were thrust into Elon Musk's shoes today, would not be able to do the things that those people can do and would not be able to make the decisions that those people make effectively. So the process of earning the seat is every time you get punched in the gut and you have a bad experience with a customer, with an investor, with an employee, or every time you are faced with a challenge where you have to learn something really fast to be able to, swim instead of sink. Those are processes that you can experience as suffering in the moment, or you can think of as just more opportunities to earn the seat into the future. So that's something that I think if I embodied earlier on, I would have not necessarily made different decisions or pointed myself in a different direction, but I just would have enjoyed it more. And I think I would have felt a lot less strain and a lot less stress, because in reality, I don't think I would change anything in my past from a decision-making perspective. I'm so happy about where we are today and what we've accomplished. So I think I would just want to maybe experience it with a little less of a tight grip.
Yeah, I definitely agree with that sentiment. I think that I'm a big believer that greatness is in the agency of others. And I think that historically, Andrew and I have been slow to really trust people that we bring onto the team and empower them with responsibility and decision-making authority. And I think that has been a disservice to us perhaps in the past, and only in this most recent stage where we have really kind of achieved the growth that we've always been targeting, that's been the result of having an incredible team and incredible individuals who have complete domain and authority over their respective verticals. And I think that giving over that trust is something that I endeavor to do sooner and with more people across more verticals of the business as we go forward.
That's awesome. Well, Jake, Andrew, this has been a fantastic conversation. I want to say thank you to both of you for spending your time here with us. To everybody that's tuned in or going to see this otherwise, check them out. I think you guys are doing some really interesting stuff. We will be back next week with another interview, but thanks again today, gentlemen. Good luck with everything, and we will see everybody on next week's show.
Awesome. Thanks
everyone.
Tony. Thanks for having us.
Take care.
Take care.
Bye.